How many of you have ever felt like you're doing all the right things, you're saving, you're following conventional financial wisdom, their rules, but you still feel like you're behind financially? What if the real problem isn't how much money you make, but how you're told to use it? And after years of doing this work and more than 3,000 strategy calls with folks just like you, I've noticed something powerful. There's certain phrases I hear over and over and over again. Whole life is a bad investment. This sounds too good to be true. If this was true, why isn't everybody doing this? Can I even afford something like this? These aren't just random concerns, they're patterns. And they point to something that is eerie and something that is, I think, conditioned into us. They point to one thing. We've been conditioned, we've been programmed to think like consumers, not owners. And today I want to unpack that. I want to unpack the 5 most common objections that I hear over and over. And more importantly, I want to show you how to shift that thinking and help you take back control, ownership, and guarantee a future that you dream of. And how many of you have ever felt like you're doing all the right things, you're saving, you're following conventional financial wisdom, their rules, but you still feel like you're behind financially? And how many of you have ever asked yourself, if the infinite banking thing is so great, why hasn't my advisor or someone else brought it up to me? Why have I gone years without hearing about this? If those are familiar to you, welcome to the room. High five, virtual high fives to each of you. Pat yourself on the back. You are in a limited, small portion of the population willing to work on yourself first, for yourself, for your family, and for the future of your family's family. And I honor you for that. This isn't easy. It might be simple, but what we're going to cover today challenges traditional thinking. And here's what you're going to walk away with: a new perspective on whole life that has nothing to do with old school insurance sales. No fear tactics here, just control and guarantees. Why infinite banking only seems too good to be true, and what's been kept from you. How to reframe the premium conversation as an asset and not a cost, not a burden. The truth about liquidity and how you can use this concept as a fund, as an opportunity fund, unlike the money that you might have in a 401k or a bank that doesn't give you the same access. And finally, why most advisors are never talking about this, and how that might be costing you that control and guarantees in uncertain times. They say we're not in a recession yet, but I don't know, being on the phone kind of feels like it. So quick thought about this from my end is, when I saw this, like anyone who's new, I thought the same thing. This can't be true. If this was true, why didn't I know about this? I was 46 when I learned about this. Why didn't I know? So what did I do? I researched more, I read more, I dug into it more. I tried to prove that it wasn't true. I tried to prove it was too good to be true. You know what happened? When I couldn't prove it, I implemented it. I took action, implemented it, and turned my family's life completely around. Not just for me, but for my boys, for Connor, for Diego, for the people that I care about most in this world. And they're learning this with me. They're watching the journey, and they're seeing the wealth in our family shift. They're seeing us pick up a tailwind. And it all started by my thinking, by investing time in learning this valuable tool. So again, today's about clarity. Today's about showing you the things that I'm talking about every day, and having that conversation with you guys. Having the conversation and showing you, hey, maybe this is so good and so true that we should all be doing it, bringing it back to you and me level. So we're going to walk through these 5 common objections or statements that I'm hearing. And at the end, by the time we're done, you're going to not only see the thinking, the shift in your thinking, you're going to see how you can implement this to take back control of your money and set yourself up to have a guaranteed wealth producing machine, even in uncertain times. So check in, lean in, take notes, or like I like to say, make notes, and ask yourself, what if the real problem isn't how much money I make, but how I'm told to use it? Does that resonate with you? So, number 1 objection I hear, whole life is a bad investment. You know what? That's accurate. The ROI on a whole life investment, it's not an investment. Let's just face the truth. Whole life's not an investment. It's an alternate asset class. And it's one that Ernst & Young actually has an article, and I can get that too if you want to see it. Just email me or text me that you want to see this article. But there's an article that talks about how whole life in uncertain times, in economic fluctuation, which is the norm, right? We have some kind of big event every 5 to 7 years since 1910. It's the fluctuation in the market, the things that are happening. And Ernst Young says we should put 10 to 30% into PLI, permanent life insurance. They're not even talking about this magical stuff that we're talking about, but they're talking about, hey, if you put your money into permanent life insurance, you're protecting your family. You're giving yourself an opportunity fund that you can borrow against tax-free. You're able to offset some of the things that might happen with your assets that are producing cash flow or with your money that's tied to the market. What if you retire and the market's down? Wouldn't it be nice to have a tax-free asset that every dollar that you put into the system over time will come back to you tax-free? If there was such a thing, would you hesitate to put more in? I'm going to say that you wouldn't. I'm going to say, from the people that I talk to, say, you know what? That makes sense. That's my favorite phrase. I love when people in the conversation goes, yeah, Jason, that makes sense. And I'm always like, yes, I did it again. This makes sense. How cool is that? And this is not an investment. Whole life insurance, not an investment. What it is an and both asset. What it is a warehouse of wealth. What it is a place with a little bit of long-term thinking. Maybe you're giving up a little bit of access and liquidity for the first 24 months or 36 months, or maybe the first 4 or 5 years. But somewhere in that range, guess what happens? Everything shifts in your favor. You have a little bit of patience for a lifetime of profit and of tax-free profit, of money, of liquidity, of things that you can use. So you've given that $1 3 jobs. And what are those 3 jobs? Those 3 jobs are simple. We are saving our money where it is contractually guaranteed to get better and better every single day, no matter what the market or anything else in our economy is doing. Contractually guaranteed. Better and better every day for the rest of your whole life. And number 2, we've built an opportunity fund. Now we have a need. Now we want to make a purchase. Now we want to go on vacation. We have practiced discipline, commitment. We have paused our immediate need for satisfaction. We have delayed our gratification. We have built up an opportunity fund. And now guess what? That money that we save, we are going to borrow against it to do the things in our life that we want to do. We're going to put the money to work. We're going to go make a spread. Our reality, we talk about this often, is we finance everything we buy. We either pay interest or we earn it. But either way, we get to decide, do we want to keep paying other people interest? Do we want to be on the hook to make them wealthy, to give them vacations? Or do we want that for our family? Right? What do you want? Why are you here? You're here because you want something that gives you control and guarantees. And so whole life is a bad investment because it's not an investment. It's actually the place to store your money, to warehouse your money, and that the two jobs so far, we're saving and we're spending. And whose money are we spending? Your money? No, we're spending OPM. For my investors out there, you guys love OPM. We know that the fifth law of wealth, right? I believe the fifth one was to not take on bad debt. It was only to have good debt. So OPM, other people's money, we're taking a loan against our money from the mutually owned dividend paying whole life company that's tax free. And we're going to put that loan to work. And now we're earning money here, we're earning money here, and we've already multiplied our money for the future for that inevitable day when we graduate. Our family will have a tax-free estate. What we're really doing, anyone who's here that's practicing, if you're not, keep learning. Give yourself permission. But if you are practicing, you most likely, if you're generation one like myself, you have created a future for your family that is going to make everyone eventually be millionaires. What that means in the future, I have no idea. But if you would have told anyone in my family that we're going to be millionaires, we would have thought you had to steal something, go to a bank, or just win the lottery. We didn't think you could do it by adding more value and changing people's lives. And so, again, to wrap this first point up, life insurance is not an investment. We are all looking for an ROI. The traditional way of thinking is pay everybody else first, be last in line for your money, and then and only then will you invest what is left over and try to go make a big spread. And guess what? Most of the time, the money's going to go up. The money's going to come down. This is going to go up. You're going to get excited, and then you're going to be sad. You're excited, and then sad. Excited, and sad. What if every day it just went up and up and up and up and up, and you couldn't do anything about it? That would probably be a much better way to go about your finances. What's the second thing that people said to me? Oh, and this is a great one, right? I thought of this yesterday. I wrote this on a napkin. I wish I had the napkin to show you. A recession-proof, tax-free, guaranteed growth machine. That's what this should be called. Whole life income or a tax-free, recession-proof, guaranteed growth machine. It's a mouthful. Maybe we'll put it on a t-shirt. I don't know. What's the second thing that I hear? Actually, for you engineers, before we get to that second thing, we just talked about how whole life is not an investment. Check this sheet out. This is a tool that we will have in the future. This is called the Vault. This is actually Connor's policy. I forwarded a few years, right, to the age at 16 years old. And I just want to show you, you remember this, and pop this in the chat if you do. What would you rather have? A penny that doubles in value every day for 30 days or $1 million? Penny that doubles every day for 30 days or $1 million? Pop in the chat. What's your answer? If you know the answer, don't show off. Just wait a second for those who haven't heard this. Well, you might think $1 million. You might say, I'm going to take that $1 million and I'm going to put it to work and I'm going to multiply it right away. But you'd be wrong. Why? Because of the eighth wonder of the world. The eighth wonder of the world shows us around day 27 or 28, that penny that doubles every day all of a sudden accelerates all the way up to that point. The $1 million looked awful good. You get to that point, and now that acceleration takes off, right? Wealth is not linear. Wealth is exponential, and it looks like this. Steady, 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 through the roof. It is patience. The wealthy think in decades. The wealthy think in centuries. The wealthy do not think in days, hours, months, and weeks. That is not their language. So why are we? So look at Connor's policy. I want to show a couple things, highlight a couple things. If you go, and why did I do this? instead of putting money into a 529, instead of putting money in other, tax advantage accounts, I wanted one that we could control it. I wanted one that I could add more if the opportunity came up. And so in this, look, by the time he's 21 years old, the return goes from 84.3% at 20 years to a cash on cash of over 227%. Can you guys see that? 227%. And if we just continue contributing that $4,120 a year in premium deposit, and that's almost all base, that's $4,000 in base and $120 in PUAs, we have 9,390 new tax-free dollars that we can use. And as you see, every year that number goes up and up and up. It's just silly. It's silly. By the time Connor's 40, that would make me 90. We'll have contributed about $245,000 in change into this tax-free growth machine, and he will have access to $430,000 of tax-free money. Maybe that's the cost of a year of college by that point. Maybe it's a cost of a car. I have no idea, but I do know that that is a lot of tax-free growth that'll stay ahead of inflation and that will keep him working with his own system, our own family system. It just goes back to the golden rule. He or she who has the gold does what? They make the rules. They make the rules. And so I wanted to show some math. I didn't want it to be all about mindset, but I wanted to show you the effect of long-term thinking. Now show me an investment that is guaranteed to perform like this over time. Like I ask in my calls, if you knew by year that we put money in, say you and I put money into this machine every year in our business. Year one, after paying all the bills, after paying all of the employees, after doing all the things, we have about 60% liquidity in our company. We'd be like, that's all right. It's not great. But after doing everything, we can't expect this business to be profitable in year one, can we? And year two, we put the same amount in, and now it's grown to 70+%. Year three, we're at 85 to 90%. Year four, after expenses, payroll, everything else, same amount in, and all of a sudden, we have more than $1. By year five, it grows again, and it's going to get better every year. How many of these would we want to have? These tax-free vehicles, growth vehicles. Would it not be as many as we are allowed to have? And how big would we want them? So there goes one shift already with how we're thinking about this. And the next one, this sounds too good to be true. These are the folks coming in that have been burned before. They've had bad advisors. They've done bad investments. And what I first say is, listen, I love you, and I can't change what's happened in a previous relationship. I am not your rebound. I am here to guide and mentor you. And the only people I partner with and we partner with are companies that have been profitable for well over 100 years consecutively, since the day they opened their doors. And this concept isn't new. And that's why it seems too good to be true, because it's hidden in plain sight. But the financial programming that we receive as we grow older, from around the water cooler, from our broke-ass uncle, from maybe a grandparent, meaning well, or someone who hadn't figured it out, maybe your parents. Hey, just put your money as much as you can into your qualified plan. And I'm not giving financial advice, but if we always ask the question, who is benefiting the most from my money and where it goes and where it stays, I guarantee you it's institutions, it's other people. It is folks that have assets under management. Because why? In 1978, 85% of Americans believed in whole life. 85. That's a lot. Then we had the FTC, we had Frank Nader, we had the scathing report come out. Life insurance is a black box. It is not transparent. The commissions are not transparent. And then what happens? By 1985, we have a whole slew of new products. All of a sudden there's universal life, there's variable universal life, and we're getting to the point where almost the famous and infamous IULs are coming to be. Not yet, but almost. But in 85, only 55% of Americans. We lost 30% of the supporters of whole life in that short period of time. And then something interesting happens. In 86 and 87, the wealthiest people are doing large single pays, dumping millions of dollars into this, just regular old whole life. Regular old whole life with a mutually owned company. Why? You might say why. That's a great question. That's a curious question. That's a value-based question. Why? Why would they do that? Well, because it grows tax-free and away from the government. Uncle Sam will never have his mitts in it again. It's protected against liens and judgment. It is in a stable environment. It is where the wealthy are storing their money. It is where the banks are storing their money. It is where large corporations are storing their money. And banks, by the way, did I mention this? $225 billion of this stuff and counting. That was 2024. I know there's a lot more. I just haven't found a solid updated number. When I started teaching this, 180 billion. So they have increased it by more than $45 billion. Again, why? Because it's in the most solvent industry in the world, the most profitable business that there is. And they've dialed it in, and they have slow and steady growth. They have planned for the next 150 years. But back to that 86 and 87, when everyone's dumping their money in, something happens in 88, the law, camera comes up, and the IRS says, wait a minute, we're feeling kind of uncomfortable about this whole life insurance thing and all the millions of dollars going in there. We're going to do something about it. And so what do? They made it so we specially engineer it now. So it doesn't look like an investment. So it qualifies without being a modified endowment contract, a MEC. And we engineer these things. We specially engineer them, the heck out of them for people like you. Daily, persistently, consistently, and they're all unique. They all look slightly different. And most of you, some of you on this call know, some of you design these things. And you know that that is because we have to solve the goal for the person in front of us. And when Uncle Sam did this, he did such a big favor because now he created deeper questions. And when we're taught that it's too good to be true, the question we really need to ask is, who does it benefit the most? Who does it put it in control? Who does it give guarantees to? Is it to us, the people who we actually are trying to figure this out for? Or is it to somebody else, to them, to the other side of the equation? You know the answer. I don't have to tell you. The truth is apparent. The truth is easy. It's not something to be complicated or confused by. Objection 3. You guys liking this so far? Objection 3. Jason, with all my debt, with all the stuff I have going on, I can't afford this. And we go through it. We make it easy. We make it manageable. We make it meaningful. I think this is the biggest shift, the biggest change for someone is understanding that aren't you worth more than you're paying yourself currently? Wouldn't it be the biggest act of love and kindness to follow the first law of wealth, to pay yourself that 10% or more? Maybe you're paying yourself 15 or 20%. But today, an actionable item would get real clear on where your money's at. If you're making 100 grand, are you paying yourself 10%? That's $10,000. If you're making 70 grand, are you paying yourself $7,000? And even if you're not, celebrate. Take ownership, because in that moment of honesty, of clarity, you'll know the map forward. And you'll start understanding that you no longer desire to be last in line for your money. Who wants to be last in line for their money? Not I. Do you? So when we start paying ourselves first, we start shifting our thinking. We start looking what our long-term vision is and how do we tie it back to today. This is what I do in every call. Here's our long-term vision. Here's your big goal. Here's where you want to be in 10, 20, 30 years. And here's today. how do we give you progress of wherever you're at financially, whether you're paying off debt rapidly, whether you're making major purchases, whether you're creating a fund to create new assets, meaning putting your little green men to work and making more money, multiplying, or is it about legacy? Are you getting to the point in your life where it's really about making sure that everything's taken care of when you're no longer here and you just want to leave your family or something you love in a better place? And when we start paying ourselves, when we start looking at that first law of wealth, this is something that I get and I hear in our family. I hear with my beautiful wife. I've heard this up until last year. As every year we're paying our premium deposits when they're coming up in May, in the fall, in the winter. And I got the question, hey, can we really afford to put that much money into our premium deposits right now? And I say, yes, of course we can. But we have this we want to do. We have this, but we have this, but we have this. It's always we have this coming up. That's for all of us. We have this cost, this expense, we have taxes, we have all these things. All of these things are behind us. It should be us, everything else. Again, us and everything else. That is the clear delineation with the shift in mindset. This is abundance. This is a little bit of patience for a long-term payoff. This, putting this in, builds up that opportunity fund. Does it feel uncomfortable? Yes. But does it force us to think differently and make different decisions around our money on a daily basis? Yes, it does that. It makes that shift daily. And it happens consistent and persistent. It's reclaiming money. It's reclaiming control. And it's owning a system that's designed to make you independent, to make you free. And when you understand that, the question changes from, I can't afford this, to how much am I allowed to put into this? How much can I deposit? Can I put my whole income in there? That's another pretty common question. And if you've dug into becoming your own banker, you'll see that around 20 years into this, perhaps that makes sense to put all of your money into this. But at first, you won't get approved for all of your money. And so if you're new here, we're only on option 3, but if you're new here, smash the like button, ring the bell, and you'll be alerted to new content. And make sure you subscribe because we want to spread this message as far and wide as we possibly can. Again, we're inviting everyone to get on this big bleep bus. This big bleep infinite banking bus. Invite your friends, your coworkers, your family. Invite someone that maybe is a little bit mad at you and you have to do something good for them. Invite them here. Invite them here. That's your way of saying, I'm sorry. Let me show you the most powerful thing I've learned about in the last decade, maybe in my life. Share it with them. You won't regret it. You will be someone they will thank forever. You could be a disruptor for their family with that ripple effect. Question 4, objection 4. What if I need access to my money? I have opportunities coming. I have things that we're going to buy. I need a new vehicle. Okay, but where's your money sitting now? Where do you store your liquidity now? In a bank? You ever try to go to a bank and get out all your money? I have a friend, multi-millionaire. We went out to lunch last year, probably around this time, and he was late meeting me. I was like, sir, what's up? What happened? Where were you? You know how we just sold our house, Jason? Yes, sir, I do. Well, I went to the bank with a cashier's check and I tried to get my $250,000 out. They didn't have it. They told me to come back in 2 days. Because banks don't have our money. It's locked up into a loan. We got to jump through all the hoops. Even if it's our money, sometimes we got to show proof of certain things, right? When it comes to building up your liquidity inside of a mutually owned dividend paying whole life company, guess what? When you go to take out a loan, when you say, hey, I need the max amount of cash value I have available in my policy that I have put into my system that I own and I control, that I'm number one for, they ask you 2 questions. Yes, sir. Would you like that sent to you in a check? Or would you rather have it ACH deposited? ACH, perfect. Expect it to be in your account in about 3 to 5 days. Now, with banks, large amounts, maybe it'll take a few extra days, but I have not gone more than 4 or 5 days without having my entire loan into my bank to go and put to work the way that I deem fit. And there's no credit checks. There's flexible repayment terms. If you believe like I do, the wealthy have more choices. Fair? Fair? Yes or no? If you believe that, guess what? When you pay back your system, when you're playing honest banker and you're paying yourself back in a consistent, persistent manner, we can mathematically show you how that 5 or 6% simple interest will actually end up being less than 3 by the time you pay your system back. Or if the money's out working for a longer period of time, maybe you're just paying the simple interest. Or maybe you have multiple things out working, and when that money comes back, you need a warehouse. We got to put it somewhere. So where are we going to put it? Into their system or ours? And when you dump a big chunk into our system, your system, guess what? You store it there. And you can use it again. Put it in motion again. Do what the banks do. This is why it's called becoming your own banker. This is why it's called becoming your own banker. I love the enthusiasm. Keep it up in the chat. You guys are awesome. It's way harder without multiple screens, but I feel way more focused. I feel like I'm there with you. And so far we covered 4 objections. 4 of them. What if I need access to my money? In a bank, you got all of these different requirements. They might even ask you to turn around, drop your drawers and cough. I don't know, just saying. They ask you to do some pretty crazy stuff. And then they might do all that and still say, I'm sorry, your DTI is too high. The policy loans, always guaranteed. You have the cash value, always guaranteed. Flexible repayment terms, always guaranteed. Interest ultimately benefits you. Why? If your company that you're an owner in becomes profitable, guess what happens to your dividends? Just saying. And so as we're coming through this at 3:33, objection 5. Why haven't I heard about this? I'm 45 years old, I'm 30 years old, I'm 50 years old, I'm 60 years old, I'm 7 years old. Things I hear all the time. Why haven't I heard about this? I don't know. Maybe because you weren't asking different questions. You were following the status quo. You were doing what we've been groomed to do, to give up control, to take on, the risk. And you've been doing it willingly, unquestioningly. And that's okay. I talked to a woman earlier who was making $500,000 in the real estate world consistently, had been working since she was 15 and a half years old. 4 years ago, she walked away from it. And she's growing and she's learning this right now the same way that many of you are for the first time. And you know what she said today in the call? This happened this morning. Sometimes I wish I could just go back to not knowing what I didn't know. I want to go back to where I could just make a lot of money. Yes, I was miserable, I was unhappy, but I knew what I was doing, the game. And that's where a lot of people want to stay, comfortable. And if you're comfortable, are you growing? And if you're not growing, are you dying? And so the reason that you haven't heard about this is traditionally this doesn't put favor for the banks, for Wall Street, for the government. This is giving favor to us, to the people, to the you and me level. They're not incentivized. Their game. When they send us out to go work, go work hard. Good job. We're going to match a little bit. Good boy. Good girl. Go make more. And we go do more and go make more. And we're just hoping and praying that that's going to work out one day. Will this work? Who knows? Let's just keep doing it. Do you know anyone who it's worked for? No. But I'm going to keep doing it because everyone else is doing it. And it feels like, if everyone else is doing it, they must have some sense. But why don't you know about this? I showed you how you go from 84% to 220 some percent when you get exponential growth that's tax-free later by thinking long term, right? showed you how by paying yourself first, and whether that's 10% of what you make today, 20%, or maybe you're starting at a point where you're paying yourself 10% for a few months till you build up that consistent, persistent, disciplined behavior where you feel confident that you can do this. Because this is a comprehensive strategy. It's not a product. It's a strategy, a process. It requires education. It requires personalization. And so many people, many advisors, them, the banks, the Wall Street, the government, they don't want you doing this. There's not as much in it for them. The question, what's in it for me? When they look at this, they're like, oh, but if I did this strategy or this strategy, there's more in it for me. I'm going to go in front of them. This isn't that. Sure, do I get paid doing this? Yes. And I get paid well. But I get paid for my knowledge, for my education, for my teaching, for my mentorship, for my leadership, and showing others how to do what I have done. And my faith and my belief in this is ginormous. I know if you would just do what I have done, what my peers have done, that you would be in a better place no matter what. This is one of the most heartbreaking realizations that people and I have. When we realize that we weren't necessarily lied to, we just weren't told the whole truth. We weren't told how money really works. We weren't told how we can control that system. And so, again, let's go over what we just covered. When you know this, when you see this, you realize that IBC, the infinite banking concept, is none of the things that I hear all the time on my calls. It's not a bad investment. We walked through these objections. It's not something that is a cost that might be too much for you and your family. It's really you putting yourself first versus all of the other families. Stop being last in line for your money. We've shown you how it's not an investment. We showed you how the premiums aren't a bill. We showed you how IBC gives you flexibility that's unmatched. Control that is unmatched. Guarantees that you won't find anywhere else. Without red tape, without restrictions, without hoops to jump through. And finally, we're showing you why most people don't know about this, why they haven't heard about this, why they haven't mentioned this, because they are taught to sell products, to sell what is good for the pain they think that they're solving. I'm not saying that they're doing anything wrong. They were just not trained in how to teach you how to think. And I've seen all of it. 3,000 plus conversations and going to many, many more in the near future. I've learned it's not about anything more than our mindset. It's about reclaiming what's always been yours. Put you in control of your money, your future. This entire webinar was about helping you see through the objections, hear the objections out loud, and understand how they're limiting, how they are putting a rule on your life and constraining what is possible for you. We dug deep into each of these beliefs. I told the stories I tell daily. You basically just had a strategy session with me, live, real time, with everyone watching. The payoff? Now, you're not just aware of infinite banking, you understand why it's so powerful, how you can ask better questions, now that you're equipped to make those decisions that put you back in the driver's seat. So if this struck a chord with you, if this resonated and you haven't had that strategy call yet, book a call with me. Scan that QR code. Hit the code that's there. And when you look at this, if you're still not at the point, keep working on this. Thank you for sharing that. If you're not at the point where you're not paying yourself enough that's 10% or 5%, keep working at it. Keep getting granular. Listen to this. Listen to other videos where I go deeper into the programming and the thinking and this vehicle, this process. You can continue to learn right here. As always, I am extremely blessed so grateful and touched because each and every one of you that are here supporting this mission, this vision, it shows volumes to me about what you're willing to do for yourself and for others, and most of all, for our community. This is a group of amazing individuals. So, God bless you. Thank you for being here. I love you. I love that you're learning this. And I can't wait to share more of this with you in the near future. So, again, smash the like button, ring the bell. It might turn orange, I think. And keep subscribing, keep inviting people, keep spreading the message. The Infinite Banking Bus, it's a big bleep bus. And I want you on it. If you want to get on, cool. If you don't, that's cool too. But it's plenty big. And if you want control, if you want guarantees, if you want to be in the driver's seat, taking your family to a place where you're going to talk about your family vision, your family values, and you're going to talk about setting higher standards and banking, the laws of money, and you can teach it whether your kid is 3, 4, 5, 11, 22, 40 years old. We all need the same ingredients, the same things. So be blessed, all of you. Don't forget to send your questions to us. We want to answer them. Keep them coming. And until next week, till next time, I'll see you in this next video. God bless.